Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's our Wednesday edition of Trader Talk in today's market. I'm your host, Kevin Horner, joining you from as usual, sunny Denver, Colorado. Today on a Wednesday, joined by my friend and fellow Schwab coach, Brent Moores. Good morning, Brent. How are you today, sir?
I'm doing good, Kevin. I'm happy to be on with you. I'm happy to see Rachel in the chat, and I don't know, things are just looking up, I think, and happy to talk about the markets with you.
You know, Brent, I got to say, it doesn't seem like the market much wants any chill to its process these
No,
days. I mean, we just
no.
keep cruising right along. The trends continue. We try not to fight against it here, but it's challenging even if you're sitting in profits, and I'm sure that many traders are these days. Would you agree?
Knowing how to handle markets
Yeah.
that are going up is, that can be very challenging because your
Hmm.
mind just like goes, has a different narrative than what the market is telling you probably. That's, at least for me, that's how that is. Like
You know,
I'm
it's
like, why is it going up so much?
Yeah.
I don't
It's been
know.
one of my challenges too, Brent, is fighting against it, right? Trying to not listen to the negative Nancy voice that I get from time to time and trying to stay, black and white in my process, adhering to that process. So, as usual, we'll cover a little bit about
Yeah.
that today as we talk through the trends, everybody. So, as Brent mentioned, we're joined by our friend Rachel Dash there, Rachel Dashell, that is, in the chat, Rachel Dash CS on X. You can follow us all there, Brent Moores, CS, Kevin Horner, CS. We would appreciate a follow, of course. With that, and absolutely, make sure you're subscribed to the channel here, everybody. Let's get to our disclosures, then we'll jump to the charts as usual. So first of all, remember everything we discuss should be considered informational and educational only. We do not make recommendations nor any endorsements for a specific approach to trading the market here. We do incorporate technical analysis, however, in our review of the markets. We offer up strategies, concepts, ideas that traders may choose to employ, but that's all these are, just informational pieces, concepts that you could consider. What we encourage you to do is take these concepts and customize them to your preferences. That's how you build a trading plan and a trading process. Beyond that, remember that technical analysis is just one piece of your decision-making puzzle, not the entirety of it. So we discourage you from making decisions based exclusively off what you get in the way of technical analysis. Now, if this is one of your first times joining us for Trader Talk, well, we do a top-down review of the market. What that means simply is that we start broadly with the biggest indices, work our way through sectors and industry groups, and then into stocks and the news in our final moments of the session. So make sure to use that chat. Brent and I are happy to hear from you, everybody. We'll try to bring your questions into the discussion as well. So with that, let's get to it, Brent. We're going to talk about the SPX briefly, which, needless to say, I hope, has been kind of the same thing, right? I'm not getting bored yet, but that's kind of the thing that the traders need to be considering, right? Is can we continue to manage our trend without losing sight of the trend, meaning not falling prey to the idea that it becomes simple and what have you. When you find yourself, Brent, being too easy, when things feel too easy, it's usually an indication that something is due to change. So, how are you approaching things when you're watching the SPX specifically?
So, so with the SPX, we've had this strong trend. It doesn't matter what moving average you throw up there, Kevin. It's above it because we're basically at an all-time. I think we hit an all-time high again yesterday, if I'm not mistaken.
Yep.
Yeah, and um, everything's really strong right now, and you can see that reflected in the RSI, by the way. But to your point, I guess you can be complacent. And it's like, I'm trying to think of the analogy in life here, but there's a lot of times when if you become complacent, that's when things change. And, you just got to be ever vigilant in regards to that. Now,
Mm-hmm.
sometimes watching the market, there's something I wanted to mention, and this is this. We were talking about in your mind, you can have one narrative, but you turn on the news, and a lot of times you'll hear this narrative of, oh, valuations are like through the roof. And sometimes I'll put those on X because I post on X, just like you
Mm-hmm.
post on X and Rachel posts on X. Valuation measures on the market. And by most measures, the market is quite overvalued from that standpoint. But those valuation measures aren't really that good at predicting shorter or intermediate term moves in the market. Just let me get that out there. So just because you say the market's overvalued, the market's forward PE is whatever it doesn't mean, don't interpret that as the market's about to go down necessarily. We're going to use the charts here on this, and you just have to remind yourself, and this is what I do, and how I try and combat that complacency is I try and have the rules and the ideas in place of what am I going to do in this situation versus that situation by looking at the technical analysis. And even though one last caveat here, technical analysis is not the sole means of investment research.
It's true. And yet it tells us quite a bit about the mental makeup of the traders trading these trends. Yeah. So that might be the reminder to keep here is if we can continue to approach things as black and white as possible, really relying on price action, reminding ourselves that what we see in price action is based upon a multitude of factors. But remember, price knows everything. So there's nothing happening in the market. Those concerns that you have about the various risks that we all know about, those are still built into the price action we see every single day, whether it's the SPX, the NDX, all of these indices and individual stocks. It is the same across the board. So remember that price is discounted 100% of the time. So watching that 20-day, a lot of consistency here. You could also consider the 10-day, as we've discussed. There's been some opportunities below the 10-day, but boy, are they few and far between since April 1st. Now let's go back to our basic 20-day. Let's look at the NDX. We're going to see some consistency here. Brent, that 20-day catching up to our horizontal support here that I drew in just yesterday. Basically a rally through that for the last week and a half.
Yeah, it just validates that as a support level. But you know what? In the next few days, that 20-day will probably zoom right through that support level unless we get a major change in the market. And that's a pretty steep line we got there on the NDX. They're not surprising. The NDX is, I don't know what percent exactly, but over 50% tech right now. Right. And so when we look at sectors later, we'll see just the absolute dominance of tech lately in terms of market performance.
Yeah, we will. We'll definitely check on the Market Watch tab. We'll look at the relationship of the sectors here in a moment. But a lot of the stuff we said as it relates to the SPX is consistent with the NDX. You're getting a little bit more volatility in the NDX, of course. You're getting a little bit more back and forth. But again, one of our big reminders when we're talking trend and reminder about oscillators like the RSI here, Brent, into overbought conditions yet again. That two things. Number one, overbought is not a negative. That is a validation of the trend. And two, overbought does not imply, and nor should we infer, that it means pullback imminent.
Yep, that's true, because we have too many counter examples of that. And this is one of them. You know, you can just pull up a lot of stocks and they stay overbought for a really long period of time. So it's not a negative thing there.
It's not. And you can see the last time we were below the 70 line here, Brent, when we bottomed out, it was coincident with this doji candle at support, basically. You know, one of these indecision days where we get a bounce off of the same moving average we've been watching. You know, this is not real rocket science, of course. It's easy to do in hindsight, but the challenge to us as traders is doing it on the fly. For a lot of us, it's merely seeing these instances play out over the many, 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 many years. But for a lot of you who maybe aren't in that 3-decade window that maybe Brent and I are, it's maybe believing in some of these concepts can be difficult. And I understand that. I feel like I had to really see these things play out in the wild to really become comfortable with these concepts. And so that's why we bring them up so frequently. It's why we refer back to them frequently. It's why we restate these concepts, rules, and strategies that traders are using. It's because the more we find them, they can really give us as traders that boost to believe in what we see, and then that can help you position properly. Remember, technicals are not about telling us what's going to happen next. It's about risk management and what we learn from the price action in that way. Brent, another one that can talk to us a little bit about the validation of trend. What about a consolidation after having broken higher? The Russell consolidating sideways for 4 days, 5 days, 6 days here over the last week and a half too.
It has, but the general trend is still up. And so, no, it's not as strong as the NASDAQ, but that's a 20-day moving average we have on the chart. And you can see just how strong it's been. So, I mean, really, we've seen strength across the market. And, but yeah, I mean, so we have a different dynamic with small caps. And of course, they're not going to be, as we mentioned, the NASDAQ tech heavy, RUT, not tech heavy. So that's probably part of the disparity between those two.
I think that's got a lot to do with it. The allocation of small caps tends to be heavy in financials as well. And financials have been improving. We'll look at a chart of financials momentarily, but really this is tied, I think, probably to yields, as we often point out. Yields are climbing again. Not aggressively. We have not popped back through the 4.5 level, which is very important, Brent. I mean, to me, this has the makeup of a bit of an island top in yields there. The fact that we remain below the island still could bode favorably. What happens at this 4.5 area is very important on yields. Do you agree?
Yeah, this is an interesting chart. And I was looking at it this morning because you can draw this diagonal support line that is, you know, it kind of depends how you draw it, but that is going, hey, we can get a nice bounce here and this can continue up. And I say nice, that's not good in a way necessarily because most of us aren't like rooting for higher yields, but kind of key level. Do we bounce off this level or do we break through a potential resistance level, which you have outlined in the white line? The horizontal white line. And so we're kind of at this, one of these two things is going to happen because we're coming to a convergence between those two lines and it's got to break to one side or the other. And so for most technicians, it'd be more of a bullish signal if we break to the, you know, the upside and bearish if we break to the downside. But if we do, you know, if we do break, we'll see if this ascending support level holds or if we break below that. And of course, you know, some of this will be market driven, but it's a good chart we're looking at here.
It is. It's instructive for us as it relates to the rest of the market. That's really the reason we look at yields as much as we do, is because it can be so insightful in terms of our one-day move relative, largely to small caps, right? We pay a close attention on yields. Small caps pay a close attention, and then we also, when we get into sector looks, we see some similarities in terms of price action with utilities and with real estate tied directly to yields as well. So yield story could tell us quite a bit. Let's take a look at our semis. And semis had an incredible day yesterday, Brent. I mean, we could call it a breakaway gap. You could call it a number. Take your pick of gap terminology, Brent, but it went much higher. 5% day yesterday, and we cleared it again today. So we've made a new all-time high in the semis once more.
Yeah, we have. I mean, despite kind of a negative divergence on that RSI, you know what? That doesn't mean everything. And just like when we talked about overbought on the RSI, it doesn't mean everything. And but what we are seeing is a continued, just like one flag after another, one bull flag after another, and the just strength on semi. Now, when we get to like software, we're seeing a huge, you know, the narrative we had was semis were just going gangbusters and software was terrible. We're actually starting to see a little change in the market when we get to software though on this. But right now this has been really strong, and semis, huge candle, green candle yesterday.
Yeah, just an incredible move. 20-day could be used as trend support. The unfortunate thing is that's 1,500 points away from where we are right now in this space, Brent. That's not a small move. That'd be significant by a little more than 10%, if I'm not mistaken. So, that would be a pullback of appropriate proportions, even though it wouldn't feel great. So, manage your positions, know what it can do. Understand that if we're trading, we have to be sellers at some point. Find your good reasons to be sellers so you can take profit, build cash, and so forth.
Yeah, just a couple comments in the chat
Please.
there. I love, James says, divergence doesn't defeat FOMO on the
That's true.
semiconductors, and that's true. And yes, Nvidia did have a bad day yesterday, but we have stocks like Marvell that did really well, and anyway, that I guess that's not semi, but that's it's always different in the market right now. So.
Well, there's lots of opportunity, that's for sure. Depending on where you want to put your money, the trends seem to be pretty sticky here. Now we are seeing the SPX sell down a little bit, like I mentioned. We're off about 40 basis points here, 40.4%. I thought we could look at maybe the hourly chart. I mean, there's not a lot to take from this other than we could be looking at a pause here. We've kind of pulled back slightly, but you know what? It's just been super consistent. So last level of horizontal resistance could be our first level of horizontal support. So that comes in at around that 75 area, maybe even above it at that 75.60, which is basically the last lows of the last 2 weeks or last week plus. So kind of keep an eye on that. Now that's very, very tight stuff. So let's talk about, Brent, a look at some technology. There was a request from Carol, I think it was, who wanted to see the heat map. Let's take a look at the heat map here. We'll start with the heat map. Now this is the S&P 500 heat map. If we open it up, a couple of things. First of all, lots of green over here on the right. Traditionally, the lower right corner, this kind of tends to act as a little bit more defensive in nature. So we are seeing more green in the defensive side of things. Carol asked to see technology specifically. So if we click on tech, well, now you can see where we're weak. We've taken a breather in software today after having seen a pretty good rally of late. Brent, you mentioned it, called it out, but let's look at a chart on software and then talk a little bit about this rally. I thought we could use my standard detail. Here we go. So software, good move to the upside, Brent, but looks like we found some resistance.
Yes, and just for context, software was just getting drubbed. It was getting killed for a long time, and at some point things turned around, and it did, and but like it went up so quick. Now we're pulling back. Is this just a bull flag? We'll see. Do we hit off support level? You have some support outlined today, not looking so hot. In fact, if anything, the acceleration has increased today. So, we'll see where we pick up some support here on this. I don't know on that, but that's just all over the place on that map right now.
And granted, again, double bottom down here, had a bit of a strong move. If we let's put some percentages to this. Let's see. We moved 35% over about 7 weeks. So that falls in line. I mean, one of the things there that falls in line with the window of time you might expect for a short-term uptrend between 4 and 8 weeks on average, somewhere in that vicinity. Now, what about the most recent move, which was these big, beautiful 3 candles to the upside? If this is a legitimate new break, and granted, we're below the 200 days, so we're not trending back the way we want. But if we wanted to believe that what we got in the most recent week is the most important action, well, then we shouldn't give back more than 61.8%, Brent, of this move. Otherwise, we are at risk basically for a revisit of maybe not just the 20-day, maybe basically where we began from here. Now, granted, this is just, again, a very short-term look at things, but Brent, this could tell short-term traders areas that they might monitor here on software.
Yeah, and so you can look for those levels, you can look for the support levels, you can look for the price action too on the chart. I mean, when you get a candle and it's a big candle and we're right at the bottom of the candle, that's a bearish candle. Obviously, green candles are going to be more bullish, but look at where the current price resides in relationship to the rest of the candle. Even if the candle's down, but we're near the top of the candle, that could be a signal of a potential reversal, some changing momentum on that candle, and vice versa. If we have a green candle but we're near the bottom of the candle, that could be a little bit more bearish, even though it looks green.
Also true. Good, always good insights. And inevitably, Brent, it's one of my favorite reasons for having you on. Obviously, on a Wednesday, we get to cover quite a bit. Okay, so there's a look at software. You know, one of the things we need to take a look at today, we're going to use our futures symbol and check in on oil. I've been talking a little bit about what's going on with oil. Did we make it into a gap zone? I posted about this week a couple of times. Now, I want to look, as important as the daily here is, which is pretty interesting, Brent, because we did rally into, whoops, I wanted to zoom on this. We rallied into the 20-day, 50-day confluence here after breaking down. So this is a pretty important spot on the daily here because we've got the uptrend line, former support, now potential resistance, the 20-day, the 50-day moving averages, below which both could act as potential resistance. So you've got the confluence of resistance there, Brent. And that on the hourly chart is exactly what I've been watching. So this is the 200-hour, if you will, moving average. We filled the gap that I had drawn in, right in here, all right, got through it, but then we didn't make a higher high. We made a lower high. Looks like we're getting rejected here. This could be the rejection that gives the SPX a little bit of lift here this morning, potentially.
Yeah, because certainly there's a correlation between oil. I mean, oil can affect the rest of the market, and of course, oil is. You know, we can look at the technical analysis on this and look at those levels. Who knows? Maybe there's something that comes up, some news that comes out that can certainly affect this. But right now, I mean, it seems like oil is, well, we're mid $90 a barrel here. Brent crude would be a little bit higher than that. But, you know, we're not seeing $150 oil right now. No. And that's, you know, we've certainly seen some predictions of extremely elevated oil prices. What are some of the reasons? I don't know. You know, oil markets, just like the rest of the financial markets, are forward-looking. Expectations that maybe there'll be some resolution in the Gulf down the road, not you know, necessarily near term. And you know, there's still a lot of oil being pumped right now in the world, in the U.S., in other places as well, including Venezuela's oil supply is increasing at the moment too.
It's true, Brent. As much as we wanted to put patterns on the chart, pay attention to levels, the risk factors are headline in nature. That does not invalidate the levels, though, everybody. So remember that the price levels that we move through can get, if we move through, you know, I was of the belief that if we could get through this 200-day, Brent, we could obviously scoot up to the 104, 105 zone. This is a pretty clear area of resistance. If the headline comes that leads to such a move through the 200-day, well, then this becomes a possible target for traders. But it has to move through the 200-day for that to be a possible move here. You got to know those levels within the trends. You got to look at it on a daily. Sometimes you got to pull that back to the weekly. Sometimes you drill into the hourly. The more you do it, the more consistent it becomes. And I think that the more we watch and monitor this stuff, the more prepared we can be to act when those moves do in fact happen. So let's look at energy here on the heels of that, Brent. So we've got energy up again today. Now, found the 200 on my hourly once more. Let's pull this back into the daily chart. We're still in this channel, but we are, you know, we're basically kind of consolidating. It's still undecided. Is this a new channel, a new pattern, or are we still in the pullback pattern? It's tough to know right here.
Yeah, you get patterns depending on the time frame you look, and we've seen this already. Intraday, you get certain patterns. Using that 4-hour, you know, candles, you're getting different patterns. And so, looking at different time frames and looking on the same chart over different time frames, you get different patterns, and at some point they kind of conflict with one another, and we'll see which one wins out, I guess. But right now, that channel kind of dominates right now, the shorter term channel that you have drawn on there. And, you know, we'll see if that holds there. This is the energy sector, and we're right at a couple of the, you know, significant moving averages too.
Yeah, and again, going back to the hourly chart here, Brent, with that 200-hour moving average, the things just kind of stand out. We still got this low is higher than this low, which was higher than this low. This was the 50% retracement low, so there was the entire move this year from January basically back here, to the peak we made at 976 there. That this level was a 50% pullback, so falls in line with expectations. Some traders might manage risk against that 200-hour moving average. That would change things a little bit if we broke down from there. Also, I saw we have a chat opportunity, or survey opportunity that is in the
Yes.
chat. We always appreciate your feedback, everybody. Any comments you make on these come directly to Brent and to me. Now, reminder, as James points out, you can click that link during the class. It's just going to open up a browser window for you right next to this presentation window, and you can get to it post-class. You don't have to take care of it right now, but if you get to it and share your thoughts and insights with us, we would greatly appreciate that. I wanted to, Brent, you mentioned, let's go back to the Market Watch page here. We wanted to go to the quotes. Looking at our returns, we can always take a peek on a year-to-date basis. We know that energy has been strong year-to-date, but boy, tech has really come back aggressively here. Last month, we're up about 15%, pushing towards being the leader on a year-to-date basis. Not necessarily a shock, given what we've seen of late, but any other takeaways on the sector look at things here, Brent?
Yes, a couple. One,
Okay.
just, and maybe you guys can see this, looking at the 20-day or basically a month return, how dominant tech has been. There's a few sectors where we've eked out a little gain here over the last month. Tech's up almost 15% and everything else is in the red there. So this is really, over the last month, a one sector market right now in terms of dominating the performance of the market. And the other thing is the underperformance of communications, because what we've seen for the most part over the past few years, it seems like when tech is doing well, communications is doing well, kind of the typical rotation there, cyclical type rotation. Communications is not. Now, communications, a lot of that is Alphabet is
Sure.
dominating that. But and so you get one of these big mega cap companies and it can really dominate a particular sector. But those are the two things that really stand out right now in the market. I mean, if you look at, in fact, Kevin, let's go back to the charts and look at a percentage of companies in the S&P 500 that are above their 50-day moving average. Do you have that? I can get the symbol is $SPXA50R.
A50R, there we go. Is it SP?
SP 500. Sorry, I think I said, wait, no. Sorry. I'll say it one more time, but I'll say it clear this time. $SPXA50R.
Yeah, there we go. I thought so too. So the percentage of companies over the 50-day moving average, let's put this back on the daily. There we go. It's not exactly a wonderful development, Brent. We're about half.
Yeah, it's 50-50 basically. Half the stocks are but then when you compare that, I mean, to the SPX and look at how strong the SPX is, what it's showing is this, is it's showing how some companies are doing, if I just looked at this and I said, what's the SPX doing? I may be thinking, well, SPX is probably just kind of going flat. Half the companies are above their 50-day, half are below. But if you compare that to SPX, the SPX is just skyrocketing up, and that's tech basically is what the message is right now.
True, but Brent, it's not alone in its efforts. Take a look at the equal weighted SPX index.
Yes, correct.
And this tells a different story, Brent. It may say that we have leadership in tech, but it is not exclusive to tech. We broke out of what I think looks to me like a huge cup and handle here, Brent. That is a bullish chart, broadly speaking, is it not?
That is a bullish chart. And so what we're seeing is some companies are doing, it's like what's the rich are getting richer. The
True.
ones that are doing well are doing really well, and the ones that are doing poorly are just kind of, lackluster. And so you have maybe half doing well, half doing poorly, but the ones that are doing well are doing a lot better than the ones that are doing poorly or doing worse, I guess is one way to think.
That's a fair way of looking at it. I guess the reminder is if you're trading, okay, we can trade and be exclusive to the groups that are moving in the short run. That's okay. It is risky, obviously, right? You're going to have days when the
Yep.
group you're trading isn't aggressive to the upside and you're wondering, maybe I should be in a few other of these groups. But when trading, that's fine. But if you're doing a diversified approach, it's very important to remember that over the long haul, you want to have investment dollars applied to all 11 of those domestic sectors. You need to have some of that ability to manage these movements that we can't predict so easily because they happen based on a multitude of broad macroeconomic factors. So, very important to give consideration. Now, there are groups that aren't leaders that are still making interesting moves. The ones that we've been highlighting here of late, Brent, the staples in particular made a huge pullback yesterday and got to the 200-day moving average. This looked very interesting to me. Bouncing off the 200-day today, a potential hold day as we speak here in staples. Brent, if there is going to be any selling in tech, money is not likely to leave the market, but is maybe more likely to be applied to some of these defensive groups,
Yes.
possibly staples.
Yeah, and a lot of staples is like you had Costco, which kind of got hit pretty hard. Finally picking up some support maybe here on that. That's a company that had been doing really well for a long period of time. Other staples companies are like Walmart is another one that you'd see in there, but that's a nice bounce, and that's what you want to see on a bounce if you're looking for a reversal is that nice strong candle there, which we have today on that. Right off you're going to a support level and you bounce off it and you get a nice strong bounce, that's what you want to see if you want to see the reversal there.
That's exactly it. It doesn't mean that it has to go higher, but it's the kind of action you want to see early to kind of validate this area of support. Not to mention, we got a doji right on the 200-day there yesterday, Brent, with our open and close essentially on top of each other. We opened at 9:08 and closed at 9:08, so within 1 point of each other. Perfect doji day.
Yeah, and let's talk about what that means here. It doesn't
Please.
always pan out on these charts, but what the doji is like this balance candle, and depending on what precedes it tells you how it's interpreted. If the market has been going up strongly and you get this kind of equilibrium balance candle, then that could be telling you, the momentum's wearing out and it's going to reverse. It may be an opportunity for a reversal. Same thing in this case, except in reverse. We have strong momentum to the downside preceding that doji candle. Then you start to see this equilibrium, this balance. That could be a sign that the market changes, especially when it corresponds to a support level, which is what we have. We have a horizontal support level. We have a moving average, 200-day moving average there. And so it like perfectly lined up for us there. Now, who knows? The market could change and it may prove us wrong in terms of what it's doing, but that's like the consummate bounce scenario there we have on that right now.
Yeah, the market is absolutely going to do what is necessary to fool us, the
Yes.
majority of us, 100% of the time. That's one of my favorite idioms of the market because it seems to be so valid so frequently. I did see a request, Brent, we talked about the S&P 500 and the number of stocks over the 50-day. There was some comments by some of our frequent attendees that we have a chart that kind of details this, and I thought we'd bring it up. It is a chart I'm happy to share with you all. I'll put this one in the chat for you, but the first line you see up there's your S&P stocks over the 200-day, S&P stocks over the 50-day. So we're holding the 200, 55% of the S&P over the 200-day, only 50% above the 50-day, and then down below we've got the stocks making NYSE stocks making new highs and NYSE stocks making new lows. Those are notable all of a sudden, Brent. They stand out a little bit because we've got the lowest level of new highs in the NYSE that we've seen. We're kind of coming into an area of possible support, I suppose, and then new lows are climbing a little bit. So that's a little notable, if not worrisome per se.
Yeah, and so by the way, there's approximately 500 stocks in the S&P 500. So if it's 50-50, then 250 would be above their 50-day moving average. 250 would be below there. So you can do the math on that if you want the numbers of what are above and what are below there. And if you are interested, by the way, in today's performance of how many stocks are up versus in the S&P 500 versus how many stocks are down, we can do that as well, Kevin, on the Market Watch Visualize tab too. Maybe we could point out that
Sure.
for everybody too.
Go back to the Market Watch, Visualize, and then here, instead of heat map,
Yep.
it's Index Watch.
Yep. And then you got to select the watch list that you're looking at there.
And so here we would select the public S&P 500 as an example, which gives you a really nice composite breakdown, Brent. We're basically 50-50 today on advancers versus decliners.
Yeah, and it gives you in terms of numbers and volumes and that, and you can see the big, the ones that are the outliers there, the big ones. You just put your cursor over there, and you can see it highlights it on it, so you can see which ones are which.
Yeah, I love this too. I mean, we some of us, we just get so used to doing what we do every single day. It's easy to forget all of the details available in this tool. Thinkorswim really is a fantastic platform with a ton of information if you're willing to devote the time to it, obviously. Okay, Brent, a couple other things I wanted to peek in on from a sector basis. I thought we could look at healthcare, which is also up today, bouncing off of an important spot. A couple of reasons why. It's that 20 and 50-day confluence of moving averages. It's also basically the midpoint of the range we've been in here for the last couple of months.
Yeah, kind of a key level. We'll see if we bounce from here, but you do have that channel. If we do go down the next support level, you can see that outlined pretty clearly. And if we go up, you can see where the resistance level is there. So I'm not sure, but not much, more or less sideways right now in a consolidation period.
Yeah, pretty much sideways. And similarly sideways after having moved a little bit higher of late was financials. I've been watching financials because of the action around the 50-day. We're getting a little bit of a bleed today here through the 50-day to the downside. Now, the last few times we've come through the 50-day in any capacity, Brent, you've seen buyers step in, create a tail, and give us a good short-term low. This could be notable today. If we take this red candle basically negative for the day, your level may become the lows we've seen since the break of the downtrend. But basically, I was of the belief that this has been acting far better since breaking the downtrend. But if we don't maintain the lows we've created since then, everything that I've stated and thought about and for the last few months here may just go by the wayside altogether.
Well, then you have your next man up, so to speak, the next support level up, which is that you can see that drawn out in kind of a whitish line maybe there. And so if the moving average doesn't hold, then you look for that to hold. And if that doesn't hold, that's not a great sign for it.
Less than ideal, yes. I agree with you entirely. Now, hey, we were talking about staples and having found support and whatnot, but I wanted to take us through a couple of stocks in the staples space that have been downgraded at Bernstein today, all of which are going to find themselves in that space. And I find this to be a little interesting to me. So they went ahead and downgraded. I've got 5 symbols here, Brent. We've got ConAgra in a clear downtrend. Yeah. I'm like, hey, this is great. Thanks for the downgrade. But why not back here when we were at 1920? That would have been helpful as we were into resistance then too, sir. Why are we waiting to make new lows to get a downgrade? This stock has been in a downtrend for 18 months.
Yeah, I mean, it's almost a little over a third of the price it was back then. So.
So the reminder on this could be, hey, if the downtrend is persistent, you get a downgrade. If the stock starts to move and improve following downgrades, that would be notable. So pay attention to that. Also downgraded Kraft Heinz, KHC, similar. Again, why are we downgrading into massive downtrends? I don't know. We've also got General Mills, Brent. So they are just picking up. Okay, I'm just trying to figure them out. That's all. I mean, these charts don't look great, except maybe this Campbell's one that starts to look a little bit like maybe there's been some bottoming action in here, Brent. We've got a multitude of lows, a double bottom with a bullish divergence here in the RSI of late. Maybe there's some differences here.
Yeah, so we'll see. But we need, sometimes you get this kind of glimmer of hope in these, but we really need to start to not just hold some support levels, but you want to start breaking into some higher highs before you start to call. There's like hey, you go from stages. The downtrend is strong. The downtrend is, well, maybe it's in question. It looks like we're breaking out of the downtrend, but none of that equals an upward trend, which is really what trend traders like to see. Upward trend, we'd require higher highs and higher lows. Here, we're maybe holding some equal highs or equal lows. And so that's why we're starting to see a little bit of a glimmer of hope there.
So, I needed to give you the last one on that whole list. Simply Good Foods, excuse me. All of these charts look very much the same with some momentum shifts at the bottoms, but which does stand out a little bit. Now, the commentary from Bernstein is that all of these positions have been moved to underperform from market perform, except for Simply Good Foods, which is market perform from outperform. But they're all falling under the traditional packaged food company vein, if you will. They are heavily exposed to sustained oil inflation, which is likely to lead to an acceleration in both freight, agriculture, as well as packaging services costs. So all of this is going to prove to be possibly problematic. Now, the question, I suppose, is, hey, is all of that already taken out? Is that why we're seeing these persistent downtrends, right? Remember, the market is going to look 6 to 9 to 12 months into the future, Brent. I'm just wondering, have we already been doing that basically since February when you look at the move? Because that's when the conflict got going, and something like Simply Foods took off a 42% haircut, and it did it quick. So maybe some of this is already played out.
I think you have a valid point, Kevin, and I can't argue with that at all. So we'll just leave it at that. How about?
Hey, as a married man, I always love to take the answer I'm looking for when I get it. Okay, one more wait a minute. I actually had an upgrade, interestingly enough, in the same space in that Staples area, Yum Brands. I think Yum Brands still falls in the Staples, Brent. So Yum Brands got upgraded at Morgan Stanley to overweight from equal weight, a new target at 185 up from 180. Shares are flat year to date, not giving the company full credit for its potentially improved growth going forward, according to analysts. Now, Brent, this is a difficult chart because there's a lot of back and forth. The trend might be best seen on a weekly basis here. And when you pull it back, it does seem to be a little more clear, doesn't it?
Yeah, I mean, a nice long-term uptrend on that, and you have some longer-term support. We're still a little ways from that, but when you zoom in, it is a little bit more difficult to read. But the gist is, longer term, we've been doing better. Over the short term, we have not been doing as well. But hey, we have the upgrade now. That could help it, give it a little boost.
It certainly could. Yeah, and we'll see if this leads to a bit of a bounce. If this is the lowest low it makes on the weekly here, you'll want to see, do we trade next week above the high of this week for potential validation or continuation of the long range trend here. But any selling that brings you back to horizontal support coincident with the 200-week moving average might be notable for you longer-term investors back there. There's also a pretty healthy uptrend line if you wanted to be a little more specific in your approach that didn't like the dynamic 200-week moving average. That could all kind of come into play at that similar area around 140, so that stands out as well.
Yeah, no doubt.
All right. I'm afraid we are at time, everybody. It looks like the market's going to be good and volatile for us today. And we don't mind volatility as traders, so look for your opportunities. But as always, Brent, great discussion. Appreciate you being here and sharing your thoughts with all of our viewers today.
Hey, great to be with you all. I love to see the familiar names in the chat and everybody in the chat there. So appreciate you all.
Absolutely. And big thanks to Rachel. Big thanks to Scott there in the chat. I know we didn't get to Bitcoin. I did post a little bit about Bitcoin there on X this week. So maybe check that out. I'm sorry we didn't get to it here today, K Brown. Hit that thumbs up button below. We do get this reviewed and archived for you. And additionally, we have a survey in the chat and would appreciate your comments there. Try not to hammer me too hard for not getting to Bitcoin today. But appreciate you all. Have a great rest of your Wednesday. And we look forward to seeing you all again real soon.